Today, I want to tell you something that's a little embarrassing, and that is the top 3 most expensive trading mistakes that I've ever made. And let me be very clear. What I mean by that is that if you are new or struggling as a trader and you make even one of these 3 mistakes, God forbid you make all 3 of them, you will lose a ton of money. So my entire hopes for this video is that it meets you where you are, if you're a beginner or still struggling, and helps you to avoid these mistakes or either get over them if you're making them right now. And you may be wondering at this point, why should you listen to me on this subject? Well, my name's Steven. I've been trading in financial markets for a little over 10 years, since 2011, and I've been a professional trader for a little over 8 years. If you'll notice, there's a gap there, right, of about 2 years. Well, that's because at the beginning of my trading career, for about the first 2 years, I made 3 huge trading mistakes that cost me a lot of money and, even more importantly, cost me time I'll never get back. So in this video, what I'm going to do is share with you what each of these 3 mistakes were, also share with you how I overcame them to help you understand how to avoid them completely in your own trading, and I'll also explain a ballpark figure of what each of these trading mistakes actually cost me financially and in terms of time. So if that sounds interesting to you, go ahead, click that like button for me, subscribe if you are new, click the notification bell, and I'm going to go ahead and start the video. Before we dive into the first most expensive mistake I made, I need to give you a little bit of backstory. I started trading when I was 19 years old. I'm 29 now. And at the time that I started trading at 19, I had about $6,000 saved up. And that's what I was going to use in my trading account. Now, the reason I had $6,000 is because I've been working since I was 14 and I never spent money. Funny story about that, actually. My very first job at 14 years old was cleaning out dog kennels. Now, this is just a fancy way of saying I picked up dog feces essentially all day. And I actually was able to graduate from that with the same person that had dog kennels. She also had horse stables. So I graduated from cleaning dog kennels to now cleaning horse stables, which is just a fancy way of saying I picked up horse poop essentially all day long. Now, after that, I got my first, what I'll call a real job. This was a real 9-to-5 job, except I was still in high school. I was 16 at the time. And what I would do is go to school, and I was on this work program where I got out of school at 2. And then my shift at this truck wash that I started a job at was from 4 to midnight. And then I would go to school the next day. And I did that from the time I was 16 to 17. I'm just trying to give you a scope of how I was able to save up $6 grand by the time I was 19. But let's move forward now. At 19 years old, I start trading. I look up, I want to get out of the cleaning up poop game, right? And I'm not ready to continue washing trucks for the rest of my life. And I also don't love roofing houses, which is what I was doing at the time of 19. So trying to get out of that, I went home one day, Googled, how do I make more money online? Probably a very similar situation to something you've done if you're sitting here watching this. And I came across trading. Within a week, I think the very next day, I deposited my life savings, again at the time, was about $6,000 into a trading account. Now, just so I kind of have a better grasp on this in terms of my audience, why don't you comment below and tell me if you think that was a good idea or a bad idea? Hopefully, most of you think that that was a bad idea. And I didn't know that at the time. So if you think it was a good idea, don't worry, you're not alone. Whenever I first did that, what was the biggest mistake that I made? The biggest mistake I made, and the first most expensive mistake I personally ever made in my trading, was I started trading with real money before I learned how to trade. This is not only the first most expensive mistake I personally have made, but it's one of the most common mistakes I see traders make. I've been a trading educator for 6 years now. It's one of the most common trading mistakes I see when traders come to me. They haven't completed the process of learning how to trade before they start risking their real hard-earned money. And this is one of those mistakes that if you are making it, you will lose money. So whenever I say trading without learning how to trade, I mean learning how to trade the correct way. I don't mean going to YouTube, watching a 30-minute video, or even watching 2 or 3 hour-long videos on YouTube and then going and trading real money. That's not learning how to trade. What I want to do now is show you how you should learn how to trade, show you the proper steps you need to take to get to a point where you can risk your hard-earned money. So this is the exact steps I took to get out of that trading before really knowing what I was doing phase. When it comes to educating yourself how to trade, there's really only 7 steps you need to take to get to a point where you're ready to trade. And those consist of step number 1, which is learn the basics of the market you are trading. You need to master the basics of whatever market you're trading. I don't care if you're trading in the stock market, Forex, crypto, whatever it is. For me, it was Forex, and I had no idea what a pip was. I didn't know how the Forex market moved. I didn't know what the different sessions were. I didn't know how to place a stop or a target. I didn't know how to place an entry really, other than what the brokerage said. So it really was a huge mistake to start trading before knowing at least the basics. But we're so far from being where we need to be if we just know the basics in order for us to start trading that it's not even funny. So after learning the basics, the second thing you must do, and this is the process that I took, again, to get over this first mistake that I'd made. The second thing I did was I learned everything I could about technical analysis. Now, a lot of traders may fall under the realm of wanting to learn fundamentals, which means you would, in the Forex market, you would study the economy of the different currencies, study things like the GDP, you'd study things like the interest rates, study things like whatever the current events that are happening in that country are, and you would base a trading decision based on which one of those currencies you thought were more valuable at that specific time based on that data. That's not what I do. It's not what I had planned on doing. I am a completely technical trader. So my second step was to learn technical analysis. I mastered technical analysis throughout this phase of learning how to actually trade. And these are the steps you need to take as well. I'll tell you exactly how to take these steps in just a second. Let's move on to the third step. After you've mastered the basics, you've mastered technical analysis, the third step is to build or learn a strategy. You must master a strategy that it's like a way of trading. Whatever it is that you're going to be trading based on, it's going to be a combination of technical analysis factors if you're someone who's going to be strictly a technical analysis trader. And that's what I was. So what I did was create a ton of different strategies that were based around technical analysis, and I started making them more and more rules-based so that it was easier to follow them, which is a huge problem for a lot of people, is having strategies without rules. But the third step in the process of learning how to trade, and by the way, all of this is stuff that needs to be done before you start trying to trade with real money. So if you haven't done these and you're already trading with real money, don't worry, I made those mistakes too. But it's time to stop and actually educate yourself before you put your hard-earned money at risk in markets. Otherwise, you are going to lose it. Number 4, after you have created or learned this specific rules-based strategy, you must backtest and optimize. This backtesting and optimizing took me a year. So a year in my trading was me creating a strategy, backtesting it. And what I mean by optimizing is taking things away or putting new technical factors into it or changing the stops and the targets around to try to optimize the strategy to give me the best ROI with the least amount of drawdown, which is what you're always going for with any type of trading strategy. So this process for me, again, took like a year, but I was trying to build my own strategies and didn't really want to learn one from someone else. And after your backtesting and optimizing is done, a huge mistake I see a lot, and one of the biggest mistakes, again, that I made is I went straight into trading right after I backtested and optimized a strategy, and that lost some time for me, but it also lost me a lot of money because I wasn't ready to actually trade even after the backtesting and optimizing portion. What do you think I was missing at that point? Well, 2 of the most important concepts any trader can learn, master, and use to their benefit are risk management and their trading psychology. At this point, we've essentially made it through the steps to have a strategy that gives us an edge over long periods of time. That's what we've done. Of course, you need to know the basics. Technical analysis is how I personally build the strategies. Now that you have the strategy, your backtesting, your optimizing is all done. All you have is a specific way of trading that produces an edge, that gives you a profit over a long period of time. That's super important, but just as or even more important is number 5, the 5th thing that you need to work on, which is risk management. You must master a risk management plan. You can't just take someone else's view on risk management and use it yourself. And here's the reason. Risk management is made to keep you specifically. The reason we use it, not made for, but the reason you use risk management is to keep you specifically, you, from becoming extremely uncomfortable during losing streaks, which happen no matter how you're trading, no matter what you're trading. You will have losses, you will have losing streaks, periods of time when you go through drawdown. And what our risk management plan does initially is keeps us from like blowing the entire account, going through that drawdown, but also it helps us to stay emotionless. It helps us to be comfortable going through those losing streaks. And no one loves losing money, but that's the whole point of a risk management plan, is to keep you comfortable enough to continue trading the strategy, although you are going through losing streaks at times, which I go through to this day. I have losing streaks. Every trader you've ever heard of that's profitable has lost trades. Our risk management plan protects us during those losses. Number 6, kind of alluded to this already, is going to be learn everything you can about trading psychology. Let's pause right here. When I first started trading, remember the story, right? Did all these shitty jobs, for lack of a better word, to build up a $6,000, what I considered a nest egg, something that was my rainy day fund. If roofing houses just quit, because sometimes it did. Construction was always off and on. We can't roof houses when it rains. So this was literally a rainy day fund for like a month we had with no work where I could afford my bills still. And this rainy day fund, I decided to put all of it at risk in financial markets before I even knew the basics. From that experience, what I learned is that if that's something you're doing and you haven't mastered each of these, then you are not educated enough right now. I'm not saying you won't be in the future. Don't worry, everyone starts at nothing. But that means right now, if you haven't mastered all these, you're not educated enough to put your hard-earned money at risk in a live account. And that's just my opinion. Obviously, you do what you want to. You earned that money, not me. That's completely up to you. I'm just sharing one of the biggest and most expensive mistakes I personally made throughout my trading process in hopes that it helps you to avoid it. If you see sweat rolling off my face, I'm sorry, but the lights in here have made it extremely hot. It's like roofing houses in August in Georgia. But trading psychology, right? Let's talk about some of the practical steps you can take to better your trading psychology. First off, it's going to be hard to get really good at trading psychology without actually risking small amounts of money. Because until you experience a drawdown that you come out of profitable, meaning you hit an equity high, right? Let's say you made 10% on your account, then you saw that 10% gain drop down to where you lost 9%, and then you go back up to new equity highs. That's what I mean by coming out of a drawdown. Until you experience that, it's going to be tough. And you're going to have to experience that over and over, kind of like building muscle in the gym. You need to put in the reps and build that muscle. You need to, I'm actually, good example of this, I probably went through between 5 and 10 drawdowns with real money before I was actually comfortable and I considered myself having good trading psychology. But that's not where you start. Where you want to start in this phase, in the educating yourself phase, is you want to start by reading books. You want to start by watching YouTube videos about trading psychology. A great resource is Mark Douglas. Plenty of YouTube videos on here, I'm pointing at my computer, by the way, on YouTube, where he explains his philosophy on trading psychology. And that's where I take a lot of my philosophy of trading psychology from, is Mark Douglas. So, and not only that, we have plenty of videos as well. If you're like, oh, I don't really like the way you teach, then feel free to go check out anybody's videos on trading psychology. The more education you get from different places, the easier it's gonna be for you to create your own philosophy around trading psychology. But another thing that helps a lot with trading psychology is, again, demo trading or trading with a tiny amount of real money. Speaking of demo trading, our next step, and number 7, is going to be creating a trading plan and demo trading. Just like trading psychology, there are plenty of videos on YouTube. We even have videos where we teach how to create a full trading plan. The reason for this is you want to have written down rules for everything about your trading. You want to have your entire strategy written out. What are the conditions and the entry reasons that you use with your strategy? What are the stops and targets you take every time? You want to have your risk management set out. Do you only risk 1% every trade? Do you risk a little more, a little less? You want to have some of your goals there, the times that you can trade, the time frames you trade on, the currency pairs you trade. All of this goes into your trading plan, and it's really important for you to have that written down. and not just have it in your head. It doesn't have to be physically written down. Use a Google Doc. That's what I do. I have a Google Doc that I look at every morning. It's got my full trading plan. Now, not only do you need that trading plan, another part of educating yourself is going to be demo trading. Why? Well, you want to educate yourself on the platform that you're going to be using to actually trade. You don't want to be making platform mistakes that cost you real money. That is going to be a terrible scenario. Trust me, I've done it. That's why I'm telling you this, is because this is one of those expensive mistakes. All of this into one, but definitely a platform mistake where I didn't place a stop loss on accident because I didn't really understand what the order confirmation looked like after placing a stop loss on my platform. I lost a lot of money just on one trade doing that. So you want to avoid mistakes like that, and also demo trading for a certain amount of time, let's say between 1 and 3 months. If you see your system go in and out, your entire trading plan, your actual strategy with your risk management, with your stops and targets on the currency pairs you like, on the time frames you like, if you see that system go in and out of drawdown a couple of times throughout that 3 month period that you demo trade, that's going to do wonders for your trading psychology and your confidence. That was extremely long-winded, but guess what? It was necessary. And if you're still here, you probably have a chance at becoming a profitable trader. But the reason it was so long-winded is because this is the proper way to go about educating yourself on how to trade. Everyone wants the easy way out, me included. I wish I could have just watched one video about a strategy on YouTube and become a profitable trader. I wish that I didn't have to do all the backtesting and optimizing work that I had to do. But this is something that cost me. Let's get into what it costs now. And the truth is, I believe this cost me about 65% of that original account. I remember my account going from 10 years ago at this point, but I remember my account going from $6,000 down to like right above $1,500. And the emotional turmoil that came with was extreme. Again, because that was my rainy day fund. That was literally my life savings at 19 years old. And it took less than 6 months to deplete that, something that took me 19 years to save up, from $6,000 all the way down to like $1,500. That was the money I was going to use for bills if I ever had a month or two where I didn't have that much work roofing houses. This was detrimental, and it was a huge emotional roller coaster for me. Lost a lot of time and a lot of money doing it, which is why I hope you will take this part of the lesson and follow it. If you're someone that's not mastered every one of these, start wherever you are. If you already know the basics, start at technical analysis. You know both of those. Start at creating or learning a strategy. You already have one. Start at backtesting, optimizing. You get the point. Wherever you are, start at the next step. And once you complete this process, you can consider yourself educated as long as this process is complete and you have a trading plan that provides an edge over time. Then you can consider yourself educated enough to actually start trading with live money. The reason I say that is not to tell you what to do. Obviously, it's your money. Go do whatever you want to with it. What I'm trying to explain to you is what I wish someone would have told me in the first year or two of my own trading process. All right, I know that was long-winded. The other two won't be as long. Let's move on now to the most expensive mistake I made, number 2. Before we move on, just because I really appreciate you sticking it out with me throughout an entire talking head video that was like 16 minutes, and even more than me just appreciating it, the fact that because you did, I know you are extremely determined to become a profitable trader. I want to share a free resource with you that will take you through each of these 7 steps absolutely free. It's this playlist here on our channel. If you type in the trading channel on the search bar, come down to new to Forex, start here, you'll see that we go through the beginner type stuff. What is a pip? What is leverage? What is a pip worth? What's a currency pair? We go through a similar video to what you're watching. We go through a lot of the basic stuff. Then we get into technical analysis. We get into indicators and the trading platform that I use. We get into trading psychology. We get into backtesting strategies and full strategies. There's even more videos in this. This is what I consider one of the most valuable playlists on the internet because it's organized in the right steps to get you where you need to be. We also have risk management training here. We have some more about the platform, a couple of other strategies that I use, and some extra videos that'll help you on your trading journey. And again, it's all organized exactly like those 7 steps that I just explained to you that are the proper way to learn how to trade. So if you'd like to do that again, go to your little search bar on YouTube, type in the trading channel, scroll down until you see new to Forex start here. Let's go ahead and move on. The second most expensive trading mistake that I've ever made didn't cost me nearly as much money as the first, but is just as important because it cost me more time than any other trading mistake I've ever made. This one won't take nearly as long to explain, but again, it's just as important as the first one. The second mistake that was most expensive to me was having the wrong expectations around trading. I get it. We all come into the market for the same reason. We want to find the easiest route to becoming rich, or at least profitable enough so we can quit our day job, right? I came in for the same reason. Remember, I used to pick up poop. So obviously, that's not something I want to do for the rest of my life. I wanted the fastest way out of it. So my expectation coming into the market at 19 years old with $6,000 was this was my path to do so. And I thought it would happen within the first couple of weeks or months. I thought this was the saving grace I needed to get out of the life that I had that I didn't want anymore. So I did the numbers, calculated everything. I was making somewhere between $1,500 and $2,000 a month at the time, at 19, from my regular job. The main goal being, I want to quit that job. And I've got $6,000. So that means I need to make what? Something around 40% per month. I do a little bit of research. I find a couple of gurus on Instagram. I DM them. 40% a month, easy, man. No problem. I'm doing twice that. They had Lamborghinis, so they had to be telling the truth, right? This is a very unfortunate part of this industry that is trading. Most of the people that lead with education and value are going to be people that are trying their best to tell you the truth, at least from their experience. And most of the people that lead with a lifestyle like a Lamborghini watches money, they are likely just trying to sell you something. And I'm not saying that these two can't combine in certain places. There can be someone with Lamborghinis that provides great education. I have a really nice car. I just don't lead with that because it's going to give people, for this reason, if I lead with having a nice car, it will give you the wrong expectations of what you can achieve right now as a beginner, I almost said beginner, as a beginner in your trading career. You're not getting a Lambo tomorrow if you're just now starting out to trade, unless you get extremely lucky. It'd be just like winning the lottery. So these expectations I had were, one, to do with my lack of education on the market. Two, to do with my account balance and what I thought I needed in order to stop doing construction work and start trading for a living, which makes no sense. Why would my expectations come from that? The market doesn't give a shit if you're roofing houses or picking up dog poop the way I was. It doesn't care. It's not going to, give you more money because you're coming from a worse environment. It could care less. So my expectations also came from false gurus who were telling me that it was possible. So all this led me to having this expectation that 40% a month was possible. I started doing the math, and I'll bring this over for you. This is after 8 years. 40% a month. This is $1,690,756,000. This is starting with a $6,000 account and going 8 years of compounding that, not taking money out. So believe me when I tell you, at 19 years old, I'm not joking at all. I thought I could start a $6,000 account, keep working my day job for a couple of years, and build up to $1 billion within 10 years. That's what I expected because people were telling me, and I believed. My expectation was that I could make 40% a month. This is not possible. And let me expand on that for just a second. I'm not saying that it's impossible to make 40% in 1 month. That's possible. I've done that. It's possible to make more than that in one singular month. I'm only talking in the perspective of trying to make or having the expectation that you can consistently make 40% every single month, month over month for the next 5 to 10 years. That's what I'm saying is impossible. So just so that's clear, it's not impossible to make 40% in 1 month. I know of plenty of traders that have combined their skills with a bit of luck, got a little lucky with their strategy working perfectly for a month and had some really, really good gains throughout that entire month. It's just impossible to do that consistently over and over for the next 5 to 10 years. And I know I'm going to lose a lot of intrigued people right now because your expectations are here, and anytime someone tells you this is what you should be expecting, you almost take offense to it. And that's okay. It's not my place to hold your hand and tell you everything's going to be okay. You can have your Lambo next month. That's not what I'm here for. I'm explaining to you what I did that cost me. I'm actually more upset about this than the money. This cost me over a year of time because I was constantly searching for a strategy or a way of trading that could get me 40% a month. It never came. It doesn't exist. A consistent 40% a month. If anyone could actually do this, no matter what they started with, within 10 to 20 years, they'd be richer than the richest person on the planet. It's not something that's possible. And I'm a pretty open-minded person in terms of trading, in terms of everything. I'm very open-minded. This is possible if you're trading in a systematic way to build wealth. Not if you're trading like swing trading, trying to quit your job. This is possible if you gamble with your money and you hit a winning lottery ticket like Bitcoin from $100. Sure, I'm not saying it's completely impossible. I'm saying for you to hit 40% every month on the dot or more is impossible. And I hate to be the person to tell you that if that's something you expected. But again, trust me when I say it's coming from love. I'm doing this because these are mistakes I made. And this is one of the mistakes that cost me the most time in my trading career. This cost me time I could have been studying realistic strategies. I could have been building my trading plan. And instead, I was out here jumping from strategy to strategy, trying to find something that doesn't exist. So if you're sitting there doing that right now and your expectations for trading are making this or above, and trust me, I know some of you watching think that this is not only possible, but that making 100% a month or more than that is possible. I know that. And I really am sorry to be the bearer of bad news, but I'm not going to hold back on what I consider the truth of trading just because I think it may hurt some of your feelings. I would rather hurt feelings and you either quit trading altogether than you have to go through what I did and waste a year of your life practicing strategies or testing things that are never going to get you to the goal that you want or the expectation that you have. So if you're there right now, try to understand that your expectations from trading should be a lot less than this. And I'm not here as someone that knows everything. But what I've seen people be able to accomplish is somewhere, depending if you're a day trader, long-term investor, it's highly dependent on those things, as well as highly dependent on the strategy you have and infinite factors, right? But a good return is anything that dramatically beats something like the S&P 500, which is on a constant of like 8 to 10% per year. If you can double that or more, that is an amazing return. I've seen years that I've made over 100%. I've made well over 100% some years. And in 2020, I only made 69% during the entire year. This is something that's kind of an average for me, is somewhere between 70 and 150%. I know of a lot of traders that may risk a little bit less than I do on each trade. I risk about 2% per trade. Remember, that's not your risk management plan, it's mine. But I risk about 2% per trade. I know of traders that risk about 1% per trade, and they're doing between 40 and 50%, which means we're making similar amounts. They just have less risk tolerance than I do, which isn't good or bad. That's just the way trading goes. So if you're in the position of switching strategies and trying to find the Holy Grail, let this be the sign that you need to stop doing that and focus on realistic goals, making somewhere between 4 and 7% per month is a great place to start. That being a goal, and even go as far as say expectation, I think is a healthy expectation. 10% a month is out there, but 10% a month could be semi-healthy as an expectation. I make somewhere around 10% a month if you average it out throughout the whole year. I don't hit 10% a month every single month. It's more like another false expectation I had is that trading could be really, really consistent and I could make this 40% every month on the dot every single time. But what I've noticed is I'll have months that lose 2, then an 18% month where I made 18%, Then I'll have a month that was just break even. Might go another month about break even. Then a loss of 5. Then I'll make 20. Then I'll lose 10. That, if you're understanding what, hopefully you're understanding this. What I mean by this is every month essentially is about random for me until the end of the year, which normally averages out between 70 and 150, which is still a pretty wide range if you think about it. So in terms of expectations of trading, it's not going to be the same exact percent every month. And if you're thinking you can hit 40% or higher like I did when I first started, then please try your best to lower that expectation to something more realistic. Let's go ahead and move on now to number 3 of the most expensive mistakes I've made in my own trading career. All right, I'm going to be honest. This video has been extremely difficult to shoot. And I'm not even talking about because of the content. The content has been really easy to talk about. It's what I talk about all the time. The real reason is that midway through this video, my AC went out. And because my AC went out, I've been sweating during this whole thing. And you know what just happened right before I started recording this? A mosquito bit me on the fucking forehead. It's like the universe doesn't want me to get this out to you guys, but I'm doing it anyway because it's stuff that you need to hear. So now let's go on to the third most expensive mistake that I made throughout my trading career. And this one is probably one of the most controversial. And that is at the very beginning of my trading career, about 2 months after I was losing my own money, one of the most expensive things that I did that lost me the most money was I started trying to follow a random trader's signals. So I blindly started following other traders, expecting them to make profit for me. And, you know, there's tons of signal groups out there. I personally have the belief that they're almost impossible. It's almost impossible for you to be profitable, even if that trader is profitable. And there's a few reasons for this, and we'll go ahead and dissect them one by one. The first reason that signal groups could not work might be that the trader you're following isn't really profitable. That could be the case. And even if they are profitable, let's discount that and say they are a profitable trader. They could be a profitable trader and you could sign up for 1 month of their signals. And then you could get those signals for a month. And just as I told you in the last part of the video, I've had months where I lost money throughout the month. 5% drawdowns, 10% drawdowns over a 30-day period. It's not even that uncommon for me to see that. So what if you join a signal group and throughout the 30 days you're involved, it loses money? What do you think you're going to do? You're very likely, because you're blindly following this person's strategy, you haven't backtested it to see it go in and out of drawdown. You have no idea what the overall expectancy is or what the normal drawdown distance, as in the amount of time a drawdown lasts, or distance, as in how big of a drawdown does this system normally have. You have no idea about any of that. So even if they're trading and they're profitable and they have a profitable system and they're incredible traders, if you get involved in the signal group during a 30-day period where that particular signal group loses money, you're very likely going to quit and move on to the next signal group, which might have the same problem. And you may go, if you're anything like me, this is what I did. I went through this process with like 6 different people and it never worked out. Another reason, let's go with number 3. I think there's about 5 I want to get through in terms of reasons signal groups don't work. I don't remember the last one yet, but hopefully while I'm talking, I'll remember it. Unfortunately, I don't bullet point or write any of this shit down. I probably should. But number 3, I think, is what we're on. Number 3, are we on number 4? Motherfucker. Let's call it number 3. I have no idea. So the next reason that a signal group may not work is you may be using a completely different risk management plan than this person. What if this person's risking 1% per trade and you're risking 5 because you want to increase your account size as fast as possible, them going through a losing streak of 10 trades. And I know that's heavy. It doesn't happen often, but you could get into a signal group and lose 10 trades in a row. It's possible. So if they go through 10 losses in a row, for them, they're risking 1%. That's only a 10% drawdown for them in terms of the equity in their account. They're probably okay with that. For you, it's a 50% drawdown. Now you've lost half of the funds from your original capital. This is going to be emotionally way too hard for you to overcome. So with that being the case, you're probably going to quit that. You may quit trading altogether because of this. There's just so many reasons that signal groups are not the best idea. Another one being, let's call this number 4, it's not like a consistent way to make money. What if that person quits trading or decides to dismantle their signal group, or decides to take a vacation on a week that you really need money to pay your bills. You're not going to be able to quit your job just by following a signal group, which is something I thought I could do. Again, I'm just speaking from experience and telling you some of the bigger mistakes I made in this realm of things, which is in the realm of trying to go find signal groups that would be profitable. Those are some of the most common reasons that signal groups just plain out are almost impossible to make work, even if you're following someone that is a profitable trader. Oh, another thing, I did this in penny stocks one time because I kind of switched from Forex to penny stocks multiple times throughout the beginning of my career. And one of the biggest reasons that the penny stock signal group didn't work is because anytime I got a signal, let's say you have a full-time job and you're trying to follow these signals, you might get it and be on top of a roof like I was and not have your phone with you, because if you drop it off a roof, that bitch gonna break. So this being the case, you're not gonna be able to catch every trade at the exact same time. Oftentimes, what you'll see in a signal group is whoever is running that group will send out the trade, and then by the time you look at the market's already moved too much for you to be able to get involved, or you enter late and you end up not making any profit or very little profit compared to the person that actually sent out the signal. Hopefully you're getting it. There are a ton of different reasons that signal groups tend to fail to work for traders that are attempting to start. And I've had a lot of questions, even as a trading coach, of the reasons I don't provide signals. We have something called email analysis, but before you trade based on email analysis, we require throughout the course that you've already backtested and optimized any of the strategies that I'm sending out for email analysis. So that being the case, it's almost just like a second set of eyes on the market. And not only that, email analysis that we send out, it strictly says these are not meant as signals. They're meant as examples to show traders how I'm using the strategies they learn in the university we have in order to trade in live markets in real time. So that's really the point of the email analysis we send out. And I've had questions about, why don't you do a signal service, Stephen? Well, all those reasons I just listed are why. Another reason, what if you get accustomed to someone providing really good signals and God forbid something happens to them and they have to stop trading? For lack of better terms, and I hope this never happens to anyone providing signals, but they get hit by a bus. Then what are you going to do? You should be stuck there without a job because you quit your job because those signals were so good. It's just not a very smart way to go about attempting to begin to trade. And I learned that the hard way. Hopefully you take these lessons that I've taught you today and you either get out of them if it's something you're doing now, or you can avoid them if you're a complete beginner and not do them in the future. And I promise, if you heed these warnings, it will not only save you a massive amount of money, but also a massive amount of precious time that none of us can ever get back. With that said, I hope you guys enjoyed the video. If you did, click that like button, make sure to subscribe. We do have some space available in the TTC Forex University, which will take you through all 7 of the steps I talked about in the beginning of the video in a very organized way. Inside of the university, I will be teaching you in detail everything you need to know about the basics of Forex, along with what you need to know about trading psychology in order to have a good trading psychology and mindset while trading in the Forex market. Along with that, we teach you everything you need to know about technical analysis. Then we go through a couple of different strategies throughout the course to get you to a point of having a strategy that's rules-based enough to follow and provides an edge over the market. We go through a backtesting mastery course where you'll learn exactly how to backtest and optimize an entire trading strategy. As you can see, we also take you through a full course on risk management to ensure that you're trading in the safest way possible. And we also go through the entire process of building a full trading plan with you, all of this in a very organized fashion. Along with that, we also have the strategy vault, which houses a bunch of different strategies that we come up with, along with any new strategies we come up with in the future. And included in the course is also an entire discretionary trading course, teaching you one of my favorite discretionary trading strategies, which I call the OTZ system. On top of that, you'll also be receiving a full training course on advanced patterns if you decide to join us, and a best setups of the week video each and every week. And that's not all. You also will be receiving what I call priority coaching support, which is where I will be personally answering any trading related questions that you have. So if that sounds interesting to you, you can go to the link on the screen, which is www.ttcforex.com. ttcfxuniversity.com for all the details. If not, that's totally fine too. Just make sure you keep it locked here by subscribing, clicking that like button, comment if you made it to the end of the video, and I'll catch you in the next one. See you soon.